The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock until noon. 877-927-6648. Great day to get a call. Hey, let's just look at Snap. We spoke about it yesterday. That's a new IPO right here. This is the E-mini. I'll use the same chart. Remember, made a peak D, the E-mini, in left side, right side price time match. Pull back, held the low so far. Parameters are easy. We closed below 23.74 in the E-mini. You'll see even lower prices. The close above 23.78.75, and you'll probably be testing the high that was made of 23.80 sometime by mid-session. Now, that's the E-mini. So I'm going to use the same chart. Go to Snap. Snap right now is in leg B. Leg B in the daily chart, in the 10-minute chart from the low that was made yesterday, or just as it came out as an IPO at 11.20. 24.44 was the high, 23.50 was the low, 24 round number opening, always these round number openings, goes up to a peak D, doji high in the 10-minute, pulls back sharply, holds tightly, gaps up today, and it goes new leg A, new leg B. I'm calling that a B. I'm not calling it an extension just yet as an alternate wave count. Let me put this back. Friday, Technical Friday, a bunch of things that I got to talk about. Let me go to the 2-minute chart of Snap because we were doing that as we were wrapping up yesterday. I said there was a peak D. Basically, what we were looking at, let me expand this so you can see what I was looking at. This is yesterday's 2-minute chart. You know, I used to trade these. I remember sitting out in the garden, remotely trading IPOs because you used to have so many. I haven't done that for a long time. I should have done that yesterday because I just felt like getting back into it. Haven't done it. But it made a low, and then it went peak A, B, C, D in the 120 in the 2-minute chart, pulls back, holds the 9-period moving average, and continues A, B, C, D, and a quick sneak to an E, and that E was at 26.05 at 2 minutes past 10 Eastern Time. Then pulls back. And then pulls back very sharply before starting another rally, sharply meaning percentage-wise. That's a big move for an IPO, 24.57 after hitting the 26s. Then it starts a brand new move, and it keeps going high. Whoops, no, it does a retest. I remember that. It does a retest. 4 o'clock, it closes in the 24.45 area. And then it starts, it gaps up to it and goes A, B, C. Didn't mean to do that. A, B, C. Peak C, that is, and then it goes to a D, so restarts A, B, so we got an up, as a down arrow, up arrow, and look where we are. A, B, C, and I suspect that there will be a D, and then we get another bit of a pullback. So it's doing quite nicely today. It's up at 29.25, up 475. I think it will be going towards, I had an email earlier today from someone who's trading and says, this is a $30 stock. I'm trading it. Congratulations. Nice. Okay, enough with that. The E-mini, down 550. It has made a potential peak D. It is a peak D in the daily chart because there was a lower high from the 2401 round number high that was made 3 days ago. I'm calling it a Chapman Wave 5, which says that, yep, if there's going to be a spike to continue the 5, it has to happen by this afternoon. You've got to be pushing from 23.76 now, 23.88 area, and by tomorrow, Monday, you've got to gap up. I just don't think that's it. There are too many charts. I know there's this whole Fed thing going on. I have to look at the charts, and the charts are suggesting that we're now in for that consolidation. Remember, 2100, I said, would become both a magnet and a repellent. It's going to pop over. If it does break, it'll pop over and then come back down and wiggle, 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 up and down, yo-yo with lower highs and lower lows in a sideways to down move. Okay, leg D in the weekly chart. Now, this is very interesting. My my on-balance volume is suggesting, hey, watch this closely, because there could, in fact, be a peak D. A peak D in a 5 in the Chapman wave says, yep, you've got to be a bit careful, but at the same time, you could just go sideways, 23.77 down to 23.50s. Next week, if there's no new high, that will be a peak D. Here's the 120-minute chart. Got that peak G, and then we've pulled back very sharply. 2373, must hold that today. Now let me get out of this, and I want to show you something that I consider to be extremely interesting. Here we go. Technical Friday, I'll talk about these, and I'll talk about them. Oh, wait a minute, I can't. We've got Bill in Kansas City. Is that KS? Hi, Bill, how are you? I'm sorry.
How are you today, Basil?
Where are you?
Wichita, Kansas.
Yeah, it is. Okay, Kansas. Wichita, Kansas. Bill, what are we looking at?
Well, Alpha Papa Charlie, APC.
Okay, and the darker petroleum? Well, what are you doing with that? It made a peak D in the weekly chart. It's a C a retracement mode in the monthly, and the daily did a... I got that all drawn up, but I haven't notated it. Let me just do that for a moment. It's A, B, C, D, E. Goes to a peak F, and then it starts a... This is what I'm anticipating there's a chance that the Dow is going to do. This is a perfect example of the pattern. When I said the yo-yo pattern was slightly lower highs and lower lows as we go sideways before we slide lower, this is kind of what we're looking at. And what it's done, folks, is when APC trading at 63.81, down 28 cents now, made slightly higher highs in a channel, which I drew, and then I just never looked at it again. And that channel saw the bottom part taken out, and it kept making deeper lower lows until it hit the 200-period exponential moving average. That's why I love to put these moving averages in, because it gives you a focal point. Like on the left side, there was this gap, this huge gap. On the 30th of November, 63.72 was the low before it spiraled up to that peak F. But at the same time, the low of the gap is 60.75, and the low is 59.03. And where are we today? We're at 64.11, and the low so far is 64.11. Wait, am I looking at the right thing? We're at 63.72, and the low today has been 62.62. So we're into the gap. So what are we doing?
I'm looking to buy it here at the support of the moving average.
Okay, so now let me just put this into perspective. If you were looking only, do you look at different time frames?
Yes, I do.
Okay, so if you look at the weekly chart after that peak D and the 200-period exponential moving average became, it was resistance, snapped right through, it became fantastic support for 1, 2, 3, 4, 5, 6, 7, 8, for 10 weeks. And then it broke down, and for the last 3 weeks, it's just being deeply under, and the MACD is negative, and the stochastic's turning down at 55%. The monthly chart is actually reasonably good, but I think that there should still be a little further consolidation. So this is what I'm going to say. Have you traded this before?
No, I haven't.
So wait a minute. How did you get to choose it today when it hit exactly what I'm looking at as if it was a marker that I was looking for? It just hit that marker today, the 200-period moving average. What brought you to this particular thing today?
Well, it was a suggestion of a service I get.
Okay, all right, good. I need to know how you got there. We'll be back if you can hold on. I'd love to look at this. Bill in Kansas, and we are looking at APC and a darker petroleum. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back and we're on with Bull. We're looking at APC at 63.48. And the real question is, it's hit the 200-period exponential moving average in the daily chart. What's really interesting about this is if you go back, the 200-period moving average has been tremendous in delineating where the resistance was, say, back in April 2016 at 55s. It got repelled, and then it kept trying to pop up, and it couldn't hold above. It went to 56, 55, 56, 57, and kept coming back down until eventually it started a stair-step move, and then it just left that 200-period moving average completely alone because in September it started a fantastic move to the upside. Now, I didn't take the time to notate it. What I really wanted to do was to look at the action that it's had from the 200-period moving average, what that 200-period moving average means. And here's the clue for me. Being Technical Friday, I'm going to go into it. I'm going to expand this chart. I'm not sure, Bill, if you can see my charts at the same time. Are you able to do that?
I can.
Okay. You cannot, or you can?
I can.
You can. So what you'll see is that the MACD, the moving average convergence divergence, this red line, has just been going down, 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 down. That's the 26-period moving average on the MACD. And then the 9-period differential just has not once even touched that red line. But if you look at the histogram, these little vertical lines, they're starting to narrow a little bit. So my thinking here is that I think you've got your eye on a potential rallying stock. That's more shorter term. But I don't think there's enough evidence yet to say to me that it's worth doing anything other than if you want just to start a really small position, and you'll have to give it 63.46. You'd have to give it some room even below today's low of 62.62. I'd even put that as a 61. That's a 5-point stop. That's like a 10%. Yeah, that's a 10% stop, but on a very small position. I'm not sure I actually want to risk 10%. I'd rather get an indication that I'm paying up a little bit more, and then I can have something like a 3% stop. So this is what I'm going to say to you. This is the start of a potential basing period for APC. You see the way the stochastic has started to rally, but the price has shown no yet. There should be a divergence here because the stochastic's higher, and yet the price is down. So the very next bar, that's the Monday bar, should hit somewhere in the 64.71 area. So that's like a point and a quarter higher. So a point and a quarter higher, that is, what is that? That's about 2%. Is that right? Yeah, that's about 2%. What I'm really looking at, though, is that I want some verification. The on-balance volume is still very weak, so I don't have anything there. The histogram hasn't gone positive. It's still at 0.27%. So I'm just going to suggest to you, if this is a stock that you're interested in, the reason why I wanted to take a little time now to talk about it technically is that the weekly chart is still, the larger tide is still down. But the larger tide will improve if this thing can take out the high of 3 days ago of 66.66. If it can get to the 67s, that's really nice action. Say, hey, at worst, I've got myself a nice arch formation going towards the 68.50, maybe even 70 area, and then maybe it starts coming back down again to retest. So I'm going to do this. It's a little unusual for me to do it in a stock like this, but I'm going to say, if you're interested in this, it might be worth your while taking just a handful. I don't know how many shares you were going to buy, but let's just say you were going to buy, say, 50 shares. I would buy 5. I know that you sometimes say, well, it's not worth it with the commission, but the commissions these days are so low. I would buy 5, and I'd give it a little bit of room. With 5, I'm prepared to give it a 8% or 10% wiggle room for 3 days. I want to see going into Tuesday. So I'm going to say, nibble here. I don't think it's quite ready. But sometimes coming off a low, hitting that 200-period moving average, you bounce before you do the retest, and that's really the thing that I'd be looking at. So because it's on your focus, I'm saying to you the monthly chart is not bad, the weekly chart is not good, but the daily chart has hit a key support level. The stochastic is rallying. The MACD hasn't turned around. If it's going to do that, by the end of the day, you want to see, if you nibble here at 63.50, end of the day, you want to see somewhere around 63.75, 63.80. That's a nice candle. And then what you want is Monday for it to gap up, and that'll be fabulous action. So I'm going to say, nibble here if you want. I don't think it's quite ready, but I would prefer for you just to nibble and have a move to the upside, trying to go to the 65, 69 period moving average for the first time, and for the first time trying to see if the MACD can actually cross positive in the next week or so, because then you're kind of in place and you're watching it so closely. Let's just say the market now 24 points down in the Dow, 4 points down in the S&P. There's news at lunchtime because of all the Fed speak, and the market reacts negatively, and the market suddenly drops down 80 points in the Dow, 12 points in the S&P, and your stock, 63.54 right now, is actually at 63.72. That'll be very nice action. If it's coming down with the market, you can say, you know what? I don't even want any part of it. I'm not even going to give it a chance. If it comes down with the market, I don't want it. If it holds well, it's a good sign. Does that help you in a way?
Yeah, it sure does. I appreciate that.
And then I'm going to ask you, if you do anything, give me a call next week. Let's have a look at it, because I'd love to keep an eye on this. This is the monthly chart says, hey, keep your eye on this. The weekly chart needs a little bit of work, but I am intrigued now. Thanks so much for calling, and good luck. Let me know.
Thank you, Basil.
Thank you, Bill. So, folks, let's do this. I had another question. This is a very good question as well. This is from Warren, and let me read what he said. He said, Basil, neither Trump nor the Fed shows any signs of pulling out of mortgages. Lots of housing stocks at new highs. The XHB seems like a natural long by not fighting the Fed. Trump says he's going to boost GDP. That means houses and lots of them. Then there is Shane on Larry's show. Do not short, man, at least until July. These are 3 big factors to push the XHB higher. Do I buy here or wait for a pullback? Date is July. What leg correlates from where we are now? Warren in Denver, listener. Hey, Warren, you always give me great questions. I had a problem yesterday with my email when I slipped down to my guy who always does it, Dan. CTX Computers. I'm going to mention the name because they are so good and they're so amenable. So CTX Computers here in Newton, Mass. And asked for Dan. So what happened was he said that there was a corruption. He did a whole bunch of things. And the next thing I know, I've got a bunch of emails going left over. A couple of them are from 2011, and lo and behold, there are a couple of very good questions by who? By Warren. Very nice. Okay, so Warren, this is what we're going to do. We're going to look at HXB, and that is the Spider S&P Home Builders. And my answer to you, just a real quick email, was I think the same as the market. We've got to see what happens here. I've got a peak E in the daily chart, a leg D in the weekly chart, a leg C in the monthly chart, and the daily has given me a peak E sell mode in the very short term. I want to discuss that because this chart is so interesting. It's worth discussing. And then they had another question about about something that I'll talk about later. So I'll be right back. Basil Chapman, Tiger Technicians out. Dow's down 24, S&P's 431. I wonder what Snap's doing. Snap. Snap is making a peak B right now as we speak.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So, in the context of the home builders, let me talk about property, etc. Let me talk about here's Hilton Worldwide. I believe it made a peak E. It's down 56.88, down $1.29 today. I think that we're undergoing some kind of a recession right now, and what will happen is that the Fed will bump rates up, and very often the history of the Fed is very often they actually bump up rates just as things are getting a little tight, and that's something that I'm watching closely. I do know that hotel prices have come down quite dramatically. I look at Hilton Worldwide peak C in the weekly chart. So I think we could have a couple of weeks here of consolidation. Marriott, same thing. Marriott leg E, peak E, in the weekly, leg C in the monthly. But look at the deep decline, just very short term from 91. Was that a round number? I know 91.07 back on the 12th of February, and now trading at 86. Hey, 91 to 86. That's 5 points. That's a pretty big move, 5%. And so the question was about. What was the symbol? I just missed it. Starwood. So Starwood is STRWD, I believe. That's what I'm trying for. Did that hit right? Nope. Starwood. STWD. Yep, there it is. So Starwood is down quite sharply today, down 8 cents, not so sharply, 8 cents at 22.71. But it's got that peak E. It's holding a little better than the others, and this is Starwood Property Trust. Now it's making the H pattern, so it's got a slightly better pattern than the others right now. So Starwood, I would not be buying it. I would not be shorting it. I might be shorting it. The 200 period moving average in the weekly is 22.34, and it's pulled back just a little bit. No, I hold it. I would actually like to be buying these because I think the monthly charts are so strong. So just as a question to me, yeah. If it's a question of just what would you do with Starwood right now, hold tight. I would remind me again between $22.20 and $21.75. If it goes higher than that, I'm wrong. It's not coming down, but that's kind of what I'm looking at. And then the IYR. So now let me go back. See, IYR is dipping strongly here. It's down 79 at 79.02, down 81 cents. And it made a short-term, it made a peak D top in the weekly a while back, and then it made a peak F top just a week ago on the 27th of February at 81.02. Hey, they just miss round numbers, these stocks. So I'm saying hold tight. And so I'm going now I can go to the XHB because it's got the same pattern. Keep your eye on this chart here. This is the daily chart. Expand it a little bit. Here we go. There it is. So this one is holding very well. The MACD is very strong. Stochastics at 89%. The way I'm looking at this is that I think that there's going to be a pullback. You know what? I'm just going to take a moment here. I'm going to go to our next caller, Greg in Boston, who wants to look at OCLR, and we'll come back to this because I don't want to rush into this. Let's go to Greg, and then we'll have a little time. Let's go to Greg. Hi, Greg.
Hi, Basil. Good morning.
Good morning. How are you?
I'm well, thanks. How are you?
I'm well. Now, gee, I had an email the other day. Did you email me the other day?
I did. I didn't know if you'd get it. And then right after I emailed you, I heard that you weren't getting them. But
yeah, I had a problem with the email. I did finally get them, and then it was too late to do anything. And then I had to give my computer in just to have it all corrected. But I looked at this, and I must say, so you followed this for a while. Is that correct? Or what brought it to your attention?
Oh, it popped up on the Fidelity screen as option people, the option players getting into it. I don't know what month it was, so I started looking at it, and it had a pretty big correction here recently, but it's really had a great move in the last year. And so I was looking to see if, and I'm not in front of the screen right now, but there was a gap. I was looking for it to either come down to fill that gap that it's close to, down in that $7 range, and or hit one of the 200 EMA, the daily. And then,
I can see.
Yeah.
You've done a little homework on this, I think, yeah. So, okay, let's do this because I think you've nailed a bunch of things. And in this particular environment right now, this stock is up 57 cents at $9.45. So you've done nothing up until now.
No, I saw that doji yesterday, and I thought, that it's going to turn around and it's going to go down and try and fill that gap. So I wanted to wait for that. So that's why I was calling to see what you think about this. Just doing an H pattern, but it's also in a leg C in the 120, which looks like it's probably going to go higher.
Okay, couple of things. You've done a nice bunch of homework. Let me tell you what I'm looking at you. If I had looked at it yesterday, the candle was not quite like this as I recall. It was actually a little stronger towards the end of the day. It weakened a little bit. I would have said to you, if there is a doji close, since this is Technical Friday, let me explain what I would have done. I would have said to you, if there is a close below the wick of today's candle, this is Thursday, of 864, be careful, because there could be a retest of the body of the candle, but it might have to have one more negative day before it does it. Instead, what has happened is today it's above, it hasn't closed, we've still got a whole day to go, but it's above the high of 917, it's trading at 946, and it looks like it's going to close above. That makes the body of this candle, that's the open and close of $8.85 open and $8.88 close, that it makes that body a very strong support level. This is the way I deal with candles in the years that I've used candles. So I'm going to say to you, I like this candle very much. I like the fact that, you see, this is different to what we were looking at earlier when I was looking at APC. I didn't quite get that turn in the stochastic, that little V-shaped turn. It was more gentle. This is nice and strong. The MACD has got a lot of work to do to get positive, but while it's getting positive, you could see a little backing and filling. But I'm saying to you that technically, the way I look at candles, if that 888, 886 level holds the support and it comes down and then it bounces to a higher high, that's very positive action. Now, that's fine. So we looked at the daily, and the daily says, ooh, not bad action. But then I go back to the weekly, and the weekly's got a peak E. There's no way today that it's going to go higher than 1130, which is the high of this past week. Not this week, the week before. So this is going to be a peak E, and the MACD is negative, and the stochastic's at 69. So I think your patience in waiting, I think it's going to be to pay off. What I'm going to say to you is this: are you looking at it? Did you looked at it as an options play or as a stock to buy?
No, it just popped up on the screen as on the Fidelity platform. They like there was several of them besides that come up. That option, a lot of people were getting into them for options. That just happened to be, yeah.
I'm just going to mention this because it just reminded me. I met with some Fidelity people recently, and they were wanting to know more about their platforms, etc. If you have any questions and things that you want to know about the platform, send me an email, and I'm going to pass it on to them if there's any question, anybody, and they want to get it better and better. So just let me know. Now, I like this. If you want to hold on, I'm going to give you a scenario that I'm looking at. Good. Okay, folks, we will be back. We'll be back with Greg in Boston. Cold, beautiful, bright day today here in Boston. And we will be back. Dow's down 36. S&P's down 5. We'll look at this ocular, and we'll talk about it. OCLR at 9:47.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up to the date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, Greg was polite enough not to correct me. It's not ocular, although that's what they do. It's oclaro. Oclaro. A bright future ahead. It's an exciting time for optical communications, and we're at the forefront of delivering new innovations that are changing the way. Optical components. So optical components, and that's optical components for what? For computers, scanning, manufacturing, selling optical. Okay, well, that's what they do. So this is what I'm looking at. The more I looked at it, the more I've showed something in the weekly chart where there's an up channel. It held the support. It went into what I call the Chapman wave inside track propellant buy zone, and it held, and it's trying for the 9-period moving average. I might even recommend the same as I did with APC for Bill. I'm going to say, a really good way to get a feel for a stock like this, even though it's starting to make in the daily lower lows and lower highs. The weekly chart is making higher highs and higher lows thus far. So you could do one of two things. One is, I don't know if you want to use options or anything. I'd probably say, let's wait a few days. I'd wait until Tuesday before I start even looking at it in terms of options. But what I would say is, it's acting very well. It acted very well for 3 days. I think that it's trying to establish some kind of a base. And at $9.38, I might even say to you almost the same thing. Just start a small position here. And in this particular instance, I'd have a stop underneath the $8.88 and $8. Was it $9? Was it? 85. Yeah, right there. Yeah, and 8.86. It goes below. I'm out. But at least you get a real feel for it, because it might have to do a bit of testing. And if it tests well, if by next week, if it hasn't broken $8.50 and chopped around, but it's actually made a higher high than today's high, that's a nice sign. That's saying it's still in play, because the monthly chart is still leg D, but it's still acting very well. With the MACD is good, stochastic's not so good. So it might be in play. I just wouldn't be aggressive. That's what I'm saying. Right. I wouldn't be aggressive. Right. I would maybe either start a position or just right now say 993, 939, write it down. It's at 10:45 on Friday. It's at 939. See where it is on Monday at this time, and then on Tuesday. And that's going to give you a great clue. And maybe if you want, we can talk next week and see how it's doing, whether it's worthwhile. I don't see it as a big move to the upside. Percentage-wise, I do see that it certainly could have a 5% to 7% rally. But I don't want to risk 5% on the downside, because I'm trying to get 5%. So, but I do like the action. I want to emphasize this is nice action in a weak market. Does that help you a little bit?
It does, and I think that I'm just going to have some patience, and I'll wait to see if it comes back down to test that 885, 889 area. And
okay. The other thing,
I might buy some there.
Okay, I wanted to just say to you, I think patience will be worthwhile for two reasons. One is I haven't got the indications yet in the weekly chart that it's confirming this move, and that's really what I would like. So, yeah, let's have patience. I'm also going to put it down as something to watch. I like it. It's acting quite well here. So thanks so much for calling, Greg. Have a great weekend.
Thank you, Basil. Good day.
Thank you. Good day. So now let's go to the XHB, and there are a bunch of questions lined up. So I'm going to do the XHB, and I'm going to say two things. One is that it's exactly the opposite of UCLA that we just looked at. Look, makes a high, has a kind of a weak candle, and then there's a doji candle forming right here. If there's a close, if it fills the gap and goes underneath 35.94, then I have no question in my mind to say, yes, it could have some choppiness to the upside, but there's a chance that it makes slightly lower lows. I think that Warren's onto something that we've got to keep our eye on the XHB, but my suggestion here is also to have a little patience for two reasons. You see the TNX? Oh, I haven't even done all the numbers today. Ooh, okay, let's do that now. See the TNX is rallying? It went into that rectangle formation I've been talking about. In the monthly chart, it's starting to hit the resistance of that long-term downtrend line. I think that the market will not take lightly to the Fed saying, yes, we are going to. I know everybody thinks it's baked in. I don't think so. I think that there's going to be a choppy sideways move, and that we've got to be very careful, and we've got to keep our eye on the TNX. And what I said to subscribers to my opening call this morning is that we've got to start being a little careful here. For instance, that spectacular move that occurred in the DOD I've been talking about for a little while now. This is the elements, dogs of the Dow. This is equal weighted 10 highest yielding stocks. What they do is they buy the 10 highest yielding stocks, and those are usually the lowest priced Dow stocks. Doesn't call them low priced. It means the lowest price. And that's because the next year or whatever time period it is, they should have a swing as the leaders start to pull back a little bit, and this thing goes on its merry way to the upside. It's rare that you get the diamonds and the DOD working in the same angle, but you know what? The DOD just we've taken a 19% gain on part of the position. We took off just a little bit this morning. I said you've got to take a little bit off in a move like this for a 48% gain. And you know what? This hit 29. We're in at 18. There's something wrong with this picture that these things are moving. Look at this move in the weekly chart. I'm not complaining. And I know I'm going to pay a penalty for actually talking about it. But I just need to point out to you that something's going on here that is different to other times. I am saying this time it is different, and there's enough proof to say that this time is different. That means within the rotation of the Dow, the pharmaceuticals that got beaten up, some of the stocks that really got beaten up are really, really working. And as in the Den says, the trading gods are listening. I know that. And my expression is when you take your hands off the wheel to pat yourself on the back, that's when you hit the tree. But I needed to show it, because otherwise, how can I explain what's going on here? That's the reason why shorting is so difficult if you're shorting the indexes, because there are enough stocks, but there are certain sectors that are just beginning to turn down right now. And that's why I had to show this, just to show you that these are the 10 highest yielding stocks. And look where they are. Look at the move that they've made. 60% gain in the 29s this morning. That's just from our entry in the 18 area, not for people who've been buying low. No, actually, that was pretty much the low of the move all the way down to October, just off the bottom. But it's unsustainable, surely. And that makes me a little nervous. It makes me a little nervous, not just about this. It's making me nervous that, Terry in the Den, I said it, this time is different, but it is different. There's just no question that it's different. However, mentioning it out loud, that's where those trading guys are looking down at me and saying, Mr. Chapman, into the corner, penalty box, trouble. Anyway, we'll deal with that. It's a nice problem to have. All right, here's XHB. I'm saying, Warren, I think you're right, but I need a little more evidence about buying it here. But absolutely, if it pulls back at 36.64, XHB trading at 36.64 up a penny, if it pulls back, I think that the 36.21 level in the 9-period moving average will suggest that if it closes under that, this is the area right here to the 35.75, 35.50 area. That's where, email me again, that's where I really want to look at it again. Not only that, it is a leg D in the weekly chart. So it says we're getting to some toppiness over here. I'm being warned all over the show. All those trading girls are looking down and say, we waited all week for you to say that. Now you're in trouble. All right, we'll be back. Dow's down 25. S&P's up minus 375. We'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi everyone, let me just do this, have a quick save because I don't usually have 4 of these windows up at the same time. This is the Dow chart. Right here, this is the monthly. I've been doing a lot of work on this. You see this up channel from the 2009 low? See that beautiful up channel? You see the Chapman Wave inside track? See how it's held? The reason why I wanted to bring it up, I was looking at that Ockler chart. It had the weekly chart with those inside Chapman Wave buy zone, propellant zone, and it held so far. But look at this. Now we're on the outside of the exact upside. The percentages is exactly the same. It is a channel, and it's got an inside wave channel, and we've stopped right there in the weekly chart. And this is going to be very important. Now let's get that out of the way. I want to get rid of it. I've been doing a lot of work in parallels of where we are. I hope within another 2 weeks to have done enough to be able to make some kind of a statement that concludes it. Now, here it is. You see this is the 30-year yield. See, here's the 10-year yield, and the cyan is the light blue. we are close to making a cup formation and breaking out. That's why it's so important what the Fed says. My suspicion is that if the yields break above 31.97, I think it will impact the market. Now look at the wood. This is the iShares, the wood Global Timber and Forestry ETF. I'm calling it leg F for now, right? Could be an alternate account, F/B. I'm calling it F. And the HGX, the Philadelphia Weekly, is pulling back a little bit in F/C. So this is going to be very important. What happens next week? Because if, in fact, these guys break to the upside, that's that XHB, it's going to be very important. If yields break to the upside and the housing sector breaks the upside, that's amazing. Oh, DOD, someone just bought it again. Now it's up at nearly 90. Oh, I don't like to see this. There's something going on here. I mean, it's good, but I would much prefer a consolidation and a new move up. I don't want to see this break. And then when it breaks, it's going to break horribly. Okay, let's get back to the questions. Whole bunch of questions. We've got just enough time for them. GT wants to know about GE. So GE is holding pretty well. Not great. It's holding okay. So G is kind of stuck. It's not really leading the way. Triple M is right there. Done fabulous. Got the peak D. It looks like the XHB, but the weekly chart, leg C, very strong. Monthly chart, leg C, very strong. IBM is pulling back. I think it's digesting gains in a peak C in the weekly, E in the daily, B in the monthly. UTX pulling back after a doji candle peak E. I think it's made some kind of a short-term top, and the weekly chart looks like it's making short-term top. That really convinces me that we're in for a digestive period right now. So I hope that helps you. Yes, the strong dollar will have some impact, but it takes a while. XRT, Bob wants to know about XRT. XRT is pulling back. This is retail, so the RTH is pulling back. Maybe Costco is part of it, but yeah, this sideways move to down. That's what I'm thinking. There's so much evidence for it that I have to just go with it. And then I showed you the bond yields. That's the next question. And okay. So we've done that. Now let me just do this because this is the end of the week, and then Monday we'll look at things fresh. I'll be sending out a lot of charts this weekend, where we are, what we're doing, and what we're expecting. So this is what I'm going to look at. The dollar, let me just do this. I never did that. I'm sorry. Let's just do the dollar right now. Dollar making a leg D. Could be a peak D today, but the technicals are still very strong. Unless the dollar breaks 101.30, and that's at 101.97. 101.30, it comes down, gold rallies. I think it's going to try for another pop to the upside into the 102.30s. Gold, let's just do gold right now. Oh, there's the bell. Gold is down 8. Now, I think the dollar's the winner out of this particular round in this phase, and the dollar's going to move up. Gold needs a little bit more time to pull back. I think we've covered a chunk. And the VIX index, let's just do the VIX. I'm going to make this real clear. At some point, the VIX is it's down at 11.26. Oh, what a dichotomous market. We'll discuss it again on Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.